A lot of people are waiting for the same movie to play again, sharp halving pump, a euphoric alt season, then lights out. But this cycle isn't a rerun of 2017 or 2021. If you keep trading the last war, you'll miss the one happening now. In this video, I'll show you why the structure of this bull market is different, what's actually driving crypto under the hood, and the exact macro signals that tend to precede Bitcoin rallies and true altcoin seasons. No hype, no FOMO, just a blueprint to stay ahead of the herd. Fear has crept back into the market after a few red weeks for Bitcoin, and social sentiment flipped fast. Here's a reminder most people forget in moments like this: it's usually short-term holders doing the panicking. You can see it in metrics like short-term holder MVRV. When that slips into the green discount zone, it has repeatedly marked attractive DCA windows in recent cycles. It doesn't guarantee a bottom, but it filters out the noise and reminds you that fear is usually loudest at local opportunities. Again, not financial advice, just an observation that helps you zoom out when everyone else is zooming in. Now, let's talk about why this cycle is similar but slower. Yes, the playbook of Bitcoin strength first, then Ethereum leadership, then altcoins catching fire still applies. But the timing changed. The sequence is stretching because the macro backdrop has been different. Higher interest rates for longer, cautious liquidity, and a global business cycle that's only just starting to turn. That's why many traders keep expecting 2021-style fireworks and keep getting chopped up. The rhythm is intact, the tempo changed. A key lens that helps explain this: the copper-to-gold ratio. When copper outperforms gold, markets are generally pricing stronger growth and risk appetite. When gold leads, markets are defensive. Historically, major crypto expansions, Bitcoin breakouts and alt-season waves, tend to coincide with copper gaining on gold. Zooming out, those inflection points have often lined up eerily well with crypto bottoms and even some tops. No, the ratio doesn't cause rallies. It reflects the risk environment that enables them. Think of it as a barometer for when liquidity and confidence are returning. That barometer connects to something bigger: the global business cycle and interest rates. Crypto thrives when liquidity expands. When borrowing is cheaper, growth expectations improve, and capital moves out the risk curve. In 2017, rates were manageable. In 2020-2021, we had near zero rates and historic stimulus. This cycle, we've been grinding through restrictive policy, which delayed the go time many expected after the halving. The turning point to watch is simple: rate cut expectations firming, bond yields rolling over, and business surveys moving back into expansion. As those boxes tick, liquidity unlocks, and the rotation from Bitcoin right-pointing arrow ETH right-pointing arrow broader alts becomes far more likely. You can already see the early rotations forming. ETH versus BTC has shown basing behavior before prior alt runs, with momentum, RSI crossovers on higher time frames, appearing as macro conditions improve. It's the same staircase as before, just with longer landings between steps. First, Bitcoin reclaims and holds key trend supports. Think yearly moving averages or long-term channels. Next, ETH begins to outperform. Then capital starts sliding further out the risk curve into large cap alts and eventually mid-small caps. If you only stare at daily candles, you'll miss the structural story. Here's how I translate all of this into a clean checklist. 1. Watch short-term holder MVRV and fear, greed for DCA context. Green zones plus heavy fear often coincide with better entries. 2. Track copper, gold, bond yields, 2-year and 10-year, and rate cut probabilities. When yields break down and cuts get priced in, risk assets breathe. 3. Monitor ETH, BTC for leadership shifts. Persistent ETH strength is the bridge to serious altcoin flows. 4. Respect Bitcoin's bull market lines, like the 1-year MA. Losing those decisively on weekly closes changes the playbook, holding them keeps the bull case intact. The most misunderstood piece is the risk curve. Money doesn't teleport from savings to microcap altcoins overnight. It graduates. First into Bitcoin, liquidity and brand, then into Ethereum, ecosystem and yield narratives, then into high beta alts, narratives plus reflexivity. That graduation requires expanding liquidity, not just hopium. If the US PMI, ISM data climb back into expansion and stay there, if funding costs ease, and if credit conditions loosen, that is the backdrop where true alt season can finally ignite. Until then, alt rallies risk being sharp but short. So what should a rational plan look like in this cycle? Keep a core spot position in assets you've researched and believe in. Scale that position on fearful days rather than green candles. Use rotational clues. When ETH BTC trends up and stays up, consider measured alt exposure. Avoid all-in bets on microcaps until macro and ETH leadership say the liquidity is really there. Pre-define take-profit ladders at logical HTF levels, prior weekly ranges, fibs, major supply zones, so you're not negotiating with emotions mid-pump. And always cap risk per position, process beats prediction. One last thought on sentiment. Social interest is still muted compared with peak cycles. That's frustrating for dopamine traders, but it's constructive for builders and accumulators. If macro improves and retail flows return to anything like 2021 levels, reflexivity can take prices much further than seems reasonable today. The biggest wins usually accrue to people who built positions during boredom and fear, not euphoria. Bottom line. The 4-year cycle isn't dead, it's complicated by macro. The halving is the spark, liquidity is the oxygen. Don't trade 2025 with a 2017 playbook. Watch the signals that matter: yields, rate cuts, business cycle expansion, ETH leadership, and be ready with a plan. If this helped you cut through the noise, drop a like, subscribe for more crypto analysis, and tell me in the comments which deep dive you want next. ETH, BTC rotation signals or how to time alt season using macro plus on-chain. Stay sharp, stay patient, and I'll see you in the next one.